What's bullshit and what's real right now, in your opinion?
You can only take advantage of something if somebody allowed it to be taken advantage of. No reason why it couldn't be 400x in leverage. Greed is and it takes down the smartest and the brightest.
We've got a big CPI report coming out tomorrow. This tension between AI bubble, not AI bubble.
I don't care about the VIX. The VIX is a dumb number for me.
Do you think that eventually all these agents, these bots, whatever people are going to build, there's going to be no need for a Tony, a Tom, a Nick, a Scott? Do you see that happening?
The world will always need characters, but I think that
You're crazy.
Mr. Tony the Bat Batista, thanks again for joining once again. Friend of the pod. How are you doing?
hey, listen, anything across the grain, against the grain is good for me.
I love that. Yeah, I've been, I'm going to fanboy a little bit here. So, obviously, I love all you guys. You, for some reason, are the person that just I resonate more with. I feel like we're cut from the same cloth. So, nothing against Tony or Scott or any of the guys.
Yeah,
But,
yeah.
I have to ask you, first of all,
Sure.
did it feel good to be reunited with the old dogs?
Yeah, 100%. I mean, it's good to be creative again. It's fun to be with, family, more than just friends. Yeah, it's really exciting. I mean, it was a great year when Tom was gone, being the head of it with my son. And you're talking about Tasty Live.
Yep.
I thought my son and I would go on for a couple more years and they would find somebody to replace me. And then, how great is it, I'm a floor trader. I become a screen trader. My son takes it over. I teach him how to trade on, where do I start, from like a young little buck, looking at crypto coins and bullshit like that and make him into a real kind of equity trader. And, he takes the company to new heights, but that wasn't in the cards.
Yeah. Well. If I don't know if you want to talk about it or not, but
Let's talk
what is
about
Nick up
anything.
to? All right. Well, what's Nick up to? What's he got going on?
Yeah. He's formed a little partnership with the little small group called Rob and Maria. They do 0-day trades. You might see them on YouTube. They got some good things coming. I believe. I don't want to spill his beans, but they've got they got some good things in the works. He's a partnership there with them. They formed a new partnership. I think they're going to take that company, to good places. I invested in it, so we'll see how it
Okay.
goes.
All right. Well, that means there's good money there.
Yeah,
Yeah. Tell Nick to send me a DM because
Will.
I teach a lot of people how I do 0 days,
Sure.
and it's one of the more popular. I mean, I pretty much do a 0-day trade every single day on SPX. So
Mhm.
I would love
Yeah,
to
they're
turn
all they're
people into
all.
their
I don't
stuff.
mean to step on you, Nick. They're all
No.
automated from what I understand, and they do they do a couple of hundred trades a day. So
Wow.
they're pretty engaged. They're invested in it. They're going to try to make a go at it.
Okay. No, that's awesome.
Yeah,
Yeah. Yeah. I would love to turn people over to what they're doing. Just,
yeah,
kind of share the love. I always tell everybody it's not a fixed pie, it's an ever growing
yeah.
pie.
No,
So,
no.
yeah.
That's such a great comment, Nick, because everybody thinks like, if you make money, it's a finite amount. Like, there's $1 million today to give out in 0-day. And if Nick
Yeah.
makes 750,000, there's only 250,000 for the rest of us. Isn't that how it works?
Yeah. Yeah. No, 100%. So just real quick, since we're talking about that already, when it was very, I don't say it was very disruptive when Tom left Tasty Live. It was like, oh, okay, like, is what it is. But I think it struck a chord for everyone. Obviously, recently with Dr. Jim, I actually sent him a note the other day.
Mhm.
He, I don't know if you remember this, but we're friends. He lives like a couple blocks away from me.
Yeah.
But when you and Nick left, I think that kind of struck a chord for a lot. Well, left
Yeah.
when you guys were booted out to the side. But so I think a lot of people are wondering, and I think it's a fair question. Are you guys still eating your own dog food over there? Like, do you guys still use Tasty Trade?
Yeah, my money's still with Tasty Trade. I trade on the Tasty Trade platform. I look at the Thinkorswim platform. I don't trade on it as much as I used to. I still have some money there, inconsequential. amount. Sometimes platforms go down. You like to have two platforms, kind of thing. At
Mm,
least I do. No, but all my money, or not all my money, any money I had prior to being asked. Well, I wasn't asked to leave, but before they shut off my email, is still there. I haven't pulled anything or done anything, and I could say Tom is the same way. I mean, it's a sound company financially. I'm no longer much of a shareholder. I sold all of my stock a couple of weeks ago when they let me go out of spite. It worked out good because the stock went down 35% after I left. When Tom left the company, the symbol is IGG.L. When Tom left the company, the stock went up 40%. When Tom left the company, the stock went up 40%. When I left the company, the stock went down 35%. So numbers speak volume. That's what I think. So I have a small amount of stock left. I'm a shareholder in the company, minuscule. I think it's a good company. Money's solid and sound there. I don't want anything like that. Um, I'll make this very simple for you. They bought our company, 4 or 5 years ago. They kept it pretty much intact on our side, at least on the Tasty Live side, forever. And the last 6 months or so, they've just dismantled it, and they want to go in a different direction, I guess. I mean, it's their company; they own it. They could do what they want with it. So I wasn't a fit for them. Nick wasn't a fit for them, and I think about 40 other people at that time weren't a fit for them. It's their business. They can run it as stupidly as they want. I mean, that's their business. They bought it. They paid for it. So I have no problem with it. The problem I had with them was how they did it. What am I going to do? It's been 15 years. Let me say goodbye to my audience. Let me send an email to my team, like that kind of thing. Would
yeah.
have been nice, but they decided that wasn't the route. I think they learned that lesson
I was about
when.
to say, it seemed like they learned.
Yeah, it seemed like they learned. So maybe they're not as. Maybe they're more intelligent than I give them credit for,
Yeah.
because they let Dr. Jim and Liz, although Liz looks like she was reading a script. I don't know if she was or not, but it looked like she was reading the script. But Dr. Jim looked like he was speaking from the heart. He gave the bats a good shout out,
Yeah.
which was nice in his parting words. So maybe they learned their lesson. Maybe they're sorry. They've never said it to me. Would be nice, but it is what it
Yeah.
is.
Well, I mean, you guys built an absolutely amazing platform. Like, I still tell everybody, I get asked all the time, like, what platform should I use? I have Schwab, or are you doing Fidelity? And I tell everyone the same thing. Like, in my opinion, I like to use the best tool for whatever I'm doing. I don't like the tool to be a friction in the process.
Mhm.
Trading can be hard enough as it is. The market already
Yeah.
gives us enough challenges.
Yeah.
I don't need any more friction. To me, Tasty Trade is the most intuitive platform, bar none. And I've now experienced everything from small firms like Simple out of Canada, you probably never heard of, to
Nope.
Moo, Robinhood, Interactive Brokers, which has like 3 different flavors at this point. You got Schwab plus Toss or Thinkorswim.
Yeah.
Fidelity's awful. I
Yeah.
mean, on and on. And it's just like, it's not even close. Like what you guys did, and the little features you add along the way, how intuitive everything is, it just makes so much sense. It's kind of crazy that there is no, in my opinion, clear number 2. Even I know, you guys
Mhm.
think or swim and all that. It's not
Yeah,
even
I mean,
close.
that was 25 years ago. I mean,
Yeah.
it's not my lifetime.
Yeah, exactly.
I
Yeah,
mean,
fair enough.
hey, most of that credit has to go to Scott and Tom. I was an instrumental part of that, but Tom made all the decisions. He listened to everybody, which was great. Scott made all those decisions. He listened to everybody, which was phenomenal. But ultimately, the course and how we went was the two of them. So kudos to them and all the guys on the trade desk who were there, and the customer service that
Yeah.
some of the old guard, which unfortunately are going by the wayside. But you know, big business was it. But I got a sneaky suspicion, and Nick, this is the first time I've said it publicly. I got a sneaky suspicion in Q1 of 2027, you're going to have some decisions to make, and maybe another player in the forum. So I'll keep it right there.
All right. All right. Well,
Third time's a charm, man.
all right. All right. All right. I kind of had my suspicions.
Everybody does.
But well, it's good. Yeah. Maybe we get some money markets in there. I don't know.
Hey,
Who
if it
knows?
walks like a duck, quacks like a duck, it's probably a duck. This is what we do, man. We build businesses, and we're a one-trick pony. So
Okay.
maybe
Well,
one more time around the carousel.
All right. Well, I'll get the ACAT going.
All right, good, good, good. Love to see you.
All right, cool. Well, so just so everyone kind of like we did an episode, man, maybe 9 months ago, maybe a year ago by this point.
Yeah,
And so thanks again for coming back. But just if anyone doesn't know who Tony is, you're living under a rock, in my opinion. But especially if you know me through trading, you guys know I talk about Tony and Tom nonstop and things they say and where they're wrong and when they're right. Mainly Tom wrong, Tony right. You know, it's got my biases. Especially recently, you've been talking about this melt up, and they've been pushing back, and they've been wrong. So give a man his flowers. But Tony was or you help me if I'm going to butcher this, but
yeah.
you were a market maker. In the SIBO on the floor there back in the day. And then you also traded your own money against bond futures. Is that right?
I always traded my own money. I've never traded anybody else's money.
Okay.
That's a little bit of a fib. For 6 months, I tried to do a little bit of a partnership
Yeah,
with
that's
a
right.
group up out in California. It didn't work. I gave them their money back. We broke even. After taking a little bit of heat, to be honest with you, it was not a profitable endeavor from the very beginning. It was actually a loss from the very beginning. We got back to even, and I couldn't deal with the pressure of having somebody else's money to perform. It just wasn't in my nature at that young age. So for me, yeah, I've been a market maker since 1983. Only traded my own money. I started with $5,000. Sounds like a little bit of money, and it was. But you could be undercapitalized back then and still be able to compete with the bigger dogs. That changed 10, 15 years later. If you didn't have seven figures, you were undercapitalized. So the game changed. But at that moment, remember, options started, I think, in 73, and I
Yeah.
think puts didn't come out until 78 or 79. They only had calls for the first couple of years. So I
Oh,
started in 83. It really was in its infancy.
oh wow. I didn't realize that. I didn't
Yeah.
realize that. Wow. Okay.
Yeah,
That's
just calls was the beginning. And then I think a few years later, you can Google search it. I haven't Google searched in a long time. I think about 5 years later, maybe 78 or something like that, 79, they started with puts.
okay. Gotcha.
Crazy, right?
Yeah, no, yeah, that's yeah. Like I knew that. I mean, I always tell everybody when, like, I'm first introducing them to options for the first time. I tell them like, this is new.
Yeah.
Relatively, it's new. Like people always wonder, like, well, why don't they teach this in schools? I was teaching someone recently, or I was teaching a group of people recently, and there was someone from Goldman Sachs there who he learned through Goldman. They put him through their own kind of academy program, and he was joining me just to get a refresher. And I asked him, like, "Hey, man, like I don't know you from anyone. Like, we're meeting for the first time. Like, where'd you learn this? Like, did you take a master in finance or in your undergrad or anything?" He's like, "Oh no, like we never learned about any of this until I got to Goldman, and then they put us through their course, and I'm here just to get a refresher on all this because it's been about 10 years." And I was
Yeah.
like, perfect example. Like, it's not in the curriculums right now. I mean, maybe you get like a semester or a month where they talk a little bit about it, and it's just kind of
Sure.
here's profit loss. But so it's definitely interesting to learn about the history and kind of be part of it. I mean,
Yeah.
seeing 0 days come in, now we're seeing these kind of 0 days on equities rather than
Mhm.
just on the
Yeah.
indexes. And obviously you guys have, we talked about that last time. You
Yeah.
guys have a lot of uh, you know, we have a lot of thanks
Experience
for
with that.
all you
Yeah.
guys for putting the effort into that as well.
Yeah.
But so I just want to let everyone know like who you are, just in case they're new. And guys, go watch the other episode because Tony gives us his whole story, how he
Mhm.
just drove out to Chicago in his car. It was just awesome story. But right now, you've been
We don't need basic almost 45-year-old history. We want to talk about the here and now, right?
yeah. I don't know. I always tell everybody like when I teach them, I like to tell them like you need to know like why we're doing what we're doing, not just do this because. Like
Yeah.
you got to know why you're doing it, so you actually have intentionality behind your decisions, not just monkey see, monkey do. So yeah,
Makes sense.
people shouldn't just trust that Tony is someone. Like I want them to go hear it from you. Like why? What is story? What's your story? What's your background? But anyways, here and now,
Yep.
Lost Dog.
Mhm.
You, Tony, Scott. I love the
Yeah, me,
trio. I
Tom.
love
I'm Tony. Me, Tom. Yes. And Scott.
Yeah, you, Tom, and Scott. What did I say?
You said Tony. It's okay.
Tony. Sorry.
Yeah. No
Force
worries.
habit.
Yep.
Tom, Tony, Scott. you
Yes.
guys are doing this beautiful, you know, ring around the rosy kind of chair situation
Mhm.
thing once or 1 hour every day of the week except Fridays. Love it. 90 minutes, excuse me, not 1 hour, 90
Yeah.
minutes. Look at that. Correct on the fly.
Okay. We used to be an hour. Now it's 90 minutes. It'll
Fan-
eventually be all day at some point. You know how it goes.
it's fantastic. It's, nothing against the previous shows. I feel like this, what you guys are doing now is just way more. I don't know. We're getting into the meat and potatoes of things. Like we're actually talking about real time, disagreements between you guys. I love seeing that.
Actionable stuff is what we've always
Yeah.
tried to talk about. It's fun. It's wonderful to hear somebody talk about their accolades, but it doesn't help the audience any. You know what I mean? So we try to talk about real time stuff, and we talk about real time current events too, not just political bullshit, but real time current events that we can benefit from. We talked a little bit today about Citadel, and we
Yep.
talked about how you know it's so funny because they're the goat. I mean, they're amazing. Whatever you want to say about them, they're amazing. Ken Griffin's amazing. Um, they never decide what direction the market's going in, but they look at things for opportunity. Like this last thing with Leopold. I mean, when they took over that fund, it's not the first time they've done it. I mean, I think they've done it 4 or 5 times. They put it out there, and they put it out there not on direction of market, but on opportunity. And that's what we should all be looking for. Whatever the opportunity is. Now, you might need the market to cooperate in this direction, but there's an opportunity there. There's leverage that could be used. There's size that could be done,
Mhm.
small, large, but you have to look at it as an opportunity. A lot of people don't look at it as an opportunity.
Yeah. Well, with this whole Citadel thing and Ken
Yeah,
Griffin, there was there were a lot of people saying that Ken Griffin might have given the
orchestrated
final
some of
push.
that, or asked, or put a little fuel on the fire. He
Yeah.
may have.
What are your thoughts on that?
He may.
Does that happen
He
more
may.
often we think?
Sure, but you can only take advantage of something if somebody allowed it to be taken advantage of.
And yeah.
So Leopold just leveraged too much. If he was, instead of, let's just say for argument's sake, he was 40x in leverage. If he was 20x in leverage, it can't happen. If he was 10x in leverage, it can't happen. And there's no reason why he couldn't be 400x in leverage for 6 months, a year, and pare it down at market all-time highs. Greed is a motherfucker. I mean, it takes down the best of people, and it takes down the smartest and the brightest. Those who don't let greed get in the way. There was a movie. You're too young for it. Wall Street.
Not too. Are you
Greed.
kidding me? Greed is
Greed is
good. Greed
good.
is right.
Yeah, I mean, too much greed is a killer. I mean, go back to what was that Nat Gas company? Traders. I forgot the Nat Gas went from $2-3 where it is now up to 17, 18, $19. They just had too much leverage, and they were right because it eventually went down to $2-3, but they couldn't hold on. They had to
Yeah.
bust out basically near the highs. Long term capital, maybe it was called. I can't remember it now.
Yeah. It's funny you say that because, as that happened, with a lot of the people that I work with, I was talking to them about you got to make sure you understand your buying power. You have to understand your buying power usage and just kind of reinforcing these basic principles that I think when the markets are going well and everything's running and everyone feels like a genius, you kind of take them for granted. And it was one of those moments where it's like, all right, let's all get grounded here, get humbled, get back to basics. Are we getting a little high on our buying power usage? Are we,
We call
playing
it
with
pump the
some danger?
brakes. Sometimes you got to pump the brakes. And in old cars back in the day, before they had the ABS brakes that kind of do it for you automatically, you had to pump the brakes a little bit when you were skidding. You know what I mean? To get the car to stop. And that's what we say. You got to pump the brakes a little bit. Sometimes you gotta just take a little bit of a step back just to assess a little bit. Maybe you're a little too close to fire.
Well, so what's your take right now with this market? You've been talking with the guys about
Mhm.
this upward melting market, right?
Yep.
And we're now at all-time highs. We've got a big CPI report coming out tomorrow. We've got IVR getting crushed, seemingly almost waiting to think about like what is going to happen tomorrow. We have everything happen with Leopold. You've got this tension between AI bubble, not AI bubble. Meanwhile, all these companies have very low forward PE
Sure.
multiples,
Sure.
record earnings. I mean,
Yeah.
you have seen multiple lifetimes of markets. What's bullshit and what's real right now, in your opinion? Knowing that we don't know anything, but if you had to put your finger in the air.
Yeah, I'm not a macro trader, but I mean, I'm not oblivious to to what's going on. I think you have to have that wind knowledge to where the wind is going, whether it's going south or north. We have an administration that love them, hate them. I don't give a shit one way or the other. They're pro markets. And if that's what we have, and we have low implied volatility, now I will caution you, when volatility is low, and I look at forward slash VX, I don't care about the VIX. The VIX is a dumb number for me. It's a number that what they're thinking the market's going to be, volatility is going to be 3 weeks from today, which not 3 weeks from today, but expiration on the big monthly ones. Its expiration is 3 months from now. There's no stock to VIX. So that number can print anything it wants because there's nothing to keep it in line. If you look at VIX options that correspond to forward slash VX futures, the at the money options, the calls and puts, which are, you always know the at the money option because the at the money option is going to be approximately the same price. If the put's $1.50, the call is going to be $1.50, $1.60. That's how you know when an option is at the money without ever seeing the stock price. If there's no dividend, that's an absolute. So if you go into VIX and you look at the option chain, it might be trading, $14, but yet the at the money will be the 16 and a half or the 17 strike. That's because the future is at 16 and a half, $17. So I look at forward slash VX for daily volatility, expansion, and contraction. Forward slash VX right now, over the last 90 days or so, is at historical lows. Now that is when you do get market surprises, upside and downside when volatility is low. When volatility is high, you usually don't get market surprises that are outside the expected move because the market, unlike everything else, does have price earnings to it. There is a synthetic floor and there is a synthetic ceiling to the market because we can make some sort of analogy on what something is worth by its volatility. It's not just a meme coin, which is just pure supply and demand. Here we have some sort of parameters that can make it stay inside an expected move. It can certainly go outside the expected move by a standard deviation 2 or 3. Doesn't happen often, but it's going to happen. If it didn't happen, then every option would be priced absolute and there would be no opportunity in the market. You have to have outside expected moves to have opportunity in the market. So you want them from time to time. You just don't want them when you have the opposite position on. That's the key, what we're looking for here. So for me, you have a very low implied volatility, which is typically a bullish indicator. You've got an administration that seems to be quite bullish. The canary in the coal mine, two things. I think bonds more than oil, but bonds and oil. Oil can kind of give a little bit of disarray in the market, although we've watched it move down $10 and up $10 and have no control over the market at all. I think bonds are a little bit more here, and I'm talking about the longer term bond or interest rates. This 109 level is a precarious level. 107, we're going to get 2 rate hikes. 108 and change, we're probably going to get 1 rate hike. 110, which we were just at, 2 weeks ago, we probably don't get any rate hikes. So the market's going to tell the Fed what they're going to do with interest rates. You can also look at the Fed Watch tool, which is a good thing from the CME. Gives you a good probability there. If that Fed Watch tool is over 65%, 100% of the time it's gone in that direction. So if the Fed Watch tool has a 0.25% rate hike coming in the next 3 months and it's over 65% when the Fed meets, it happens. If it's under, it doesn't.
So I think right now for next month it's 40. I think for right now for next month it's at 40%, which will probably change plus or minus depending on what tomorrow happens.
It's like anything else. At expiration, everything comes to parity with options, and you need to be closer to the decision time to make that number more accurate.
Okay. And for everyone, if you're wondering about the /VX, if I set up your watch list, it's already at the top. Right. And I didn't come up with that. I stole that from Tony. He's talked about that before. So kudos.
It's such a great thing because it's just showing you what the options are pricing. SPX options are pricing. I mean,
Yeah.
I don't know what else to look at.
So you mentioned bonds. Do, so do you even care about inflation tomorrow? I mean, I know you guys don't follow too much of any of these numbers or anything, but do you think that what the bond market is like, what's leading what? Does the inflation print lead to the bond markets? So the bond markets really what's pivoting or pushing the Fed one way or the other? What's the chicken, what's the egg in this equation?
I'll throw the question at you for a minute in a different scenario. Maybe I can't do a good job at it, but I'll give you I'll give you a shot here. You know, what leads the pricing of your house? Is it the market that leads the pricing of your house, or is it interest rates? Let me explain. If I'm willing to pay $750,000 for your house and I'm not willing to pay any more, and nobody else is willing to pay any more, but interest rates are going lower, how much is your house worth? It's worth $750,000. If interest rates are going higher and I'm willing to pay $750,000 for your house, what's your house worth?
Yeah.
$750,000 because I'm the best bid. You know,
Yeah.
just in a very simple term. It's the same thing with the market. The market dictates what the Fed is going to do. I'm sorry. It's just the way I feel. We can have a great discussion about it. I'm sure other people can make other points about it and look at this wording and look at that wording. It's all bullshit to me. The market tells you what's going to happen because it is a tradable market. Now, there are always surprises. If you didn't have surprises, you would have the perfect market. There would be you'd get a 5% return for the rest of your life, and there would be no other opportunity. It's all about opportunity.
So and I couldn't agree more. I always tell everybody like you don't need to guess what the Fed's going to do. Just look what the bond market's told you for the last
Yeah,
5 years. It's been
yeah,
right every single time.
yeah,
But
right.
so do you have an opinion then? Like, should is there utility in the Fed then?
Yeah, so I've been through the '87 crash, and I've been through a couple of the flash crashes, and um, now you're too young for the '87 crash. I know you remember. I know you remember the movie Wall Street, but you're too young for the '87 crash. I mean, you know, I had money in a bank, Continental Bank, which was right across the street from the CBOE, where most traders had their money in, and it was insolvent. And I didn't want a check because you could wipe your ass with the check. You know, I wanted cash. And I sat there all night. I believe it was almost 10 o'clock at night, and they closed at 6, demanding cash. And I never got it. You know, I got a cashier's check, which I thought was going to be worthless anyway because nobody was going to honor any of this paper that everybody had. So, you know, the Fed is good when you have those situations. So, like, you need daddy to say, I'm here and I'm not going to default and we're going to make it good and we're going to do whatever. It might be painful or whatever. But we're not Japan. We're not
Yeah.
Costa Rica, or we're not, Venezuela. We're America, and it's going to be rock solid. You might pay more of an interest rate, but it's going to be rock solid. You are going to get your principal back. And that's really all that a bond holder cares about. And that's why, even with stocks, bondholders get paid first before shareholders. Bondholders want a yield, but they want to guarantee that their money's coming back. That's what a bond is.
Okay. Yeah, that's actually a great answer. Yeah. So we want to keep.
Stockholders are looking for upside.
Yeah. Yeah. So the Fed, to your point, is still necessary to
I
make
believe
sure
so.
we keep
But I'm
moving.
65 years old, man. I think I'm
No,
60.
but it makes
I'm
sense.
64. Sorry, I'm 64 years old. They said my birthday was in July. I'm 64 years old, man. You know, I'm a little bit old school. I have a 16-year-old son, and he just texted me a minute ago. He invested $100 in a meme coin from some Reddit thing group that he found. He made $70 on it, and he's freaking ecstatic. I have, for the last 10 years, told him if he gave me $100, I'll match his $100 and put it in a trading account. And he does it from time to time. I guarantee him a double his money, but he's happy he made $70 on $100, less than double his money, because he did it and he found it and he got the rush from it. There's something to be said for that.
No, 100%. I mean, doing your own work rather than just be. I mean,
Well, I want him to invest the money that I give him. Just the
No,
incentive
yeah.
of doubling your money right away is a way to get him involved and not invest in the what does he call it? The rug pull of the of these coins.
Yeah, that's funny. Um, okay, but yeah, so I 100% agree with you though. Without the Fed potentially backstopping things or pumping to keep the repo markets alive, right? Like there could be real
Yeah,
issues.
yeah.
And
But look at how much money is now going to private on the private side.
oh,
You know,
that's
you
right where I'm going.
okay, go
Yeah.
ahead.
Yeah,
Yeah,
well,
yeah,
that's right where I'm going because,
yeah.
well, before we get to that, actually, you
Sure.
brought up 87, and you're
Yeah.
right. I did not live through 87. I wasn't alive yet. I was almost alive. But I've definitely, I don't want to say studies the right word, but I've read a lot about it. And I've heard actually you and Tom talk about it. And a lot of things came out of that, right? Like I believe like they kind of changed the way things were priced. Breakers came into play, like
Put
all kinds
put
of
skew.
put skew.
Put
That
skew.
exactly. That's something is skew. Yeah,
Yeah, yeah.
exactly.
Skew.
Um,
We never had skew before that. If the stock was 100, the 90 put and the 110 call was the same price.
exactly. 100%. Yes, exactly.
Mhm.
So with trading the way you do it today, right? So you've been trading since then. So
Yeah.
you've lived through the dot-com bubble. You've lived through '08. You've lived through, several different rate hike cycles. Obviously,
Yeah.
2022.
Yeah.
2018. You,
18% interest rates. Yeah. Mhm.
so what for
0%
people?
interest rates.
Good times.
I had to pay somebody to take my money to hold it in a bank. I've lived through it all.
So when you're trading the way you trade today, okay,
Yeah.
so talk more current. I always tell people when times are good is when I like to plan for the bad times and to think through the bad times and kind of game plan. Like I don't want to be thinking about where's the fire extinguisher when the house is on fire. I don't want to be thinking about like, hey, does my kid know to feel the door handle at the back of his hand before just burning his hand? Things like that. How do you call it a black swan, call it whatever you want, but how do you properly prepare or defend, or what type of tactics or strategies do you use when shit's hitting the fan?
Well, if you've made it this far through the interview, I have another company that's called Grow Your Pile that I do with Tony from Mexico, who's a great friend of mine. We started a company trying to help people out. You can sign up for free. There's a paid service for it too, but we have a black swan hedge in there that we look at. We've gone through the numbers. It could be as simple as taking a percentage of your theta decay that you have and investing in and buying shorter term puts in a lot of the indexes, which you because now we have 0 day, 1 day, 5 day, 7 day options. It could be easy as that. It let me put to you this way: there's no way to hedge a full position. If you
Hmm.
have a bullish position, 30, 40% of your portfolio, and you take 1, 2, 3% of your portfolio and you have hedges on, you're just gonna lose less. You're
Yeah.
not gonna make money on the hedge. If you make money on the hedge, you over invested in the hedge, you were actually short delta and you benefited from the down move, and there's nothing wrong with that. But most people who are leaning long as public, there's no good hedge. Now, you mentioned and I mentioned volatility at all-time lows, relatively low. There's no reason why you can't do a /VX covered call. The only reason you wouldn't, and I'll explain to you what it is in 1 second, is it's very capital intensive. So you buy /VX. If you buy the micro, it's 100 shares. If you buy the mini, it's 1,000 shares of /VX, the equivalent of 1,000 shares. You'd have to do 10 naked VIX options. If you did the micro, you would do one naked. You would do one VIX call option. So you're buying the future and you're selling in the same month that the future expires. You're selling an out of the money call at the money call in /VX. I have that position on. I just put it on yesterday. Yesterday, I believe today's Tuesday. I put it on Monday of this week as like a small time hedge. Now, if the market goes higher, I lose money on that position.
Yeah.
The market goes lower, I get a
It's a
little
trade.
reprieve for a day or two, but ultimately, if we have a 6, 7, 8, 10% drawdown, I lose money on the rest of my bullish positions.
Gotcha. Yeah. You actually, again, seriously, I'm going to sound like I'm fanboying here, but and I think it was you. Maybe it was Tom. So maybe I'll
I'll
sound a
give you
little more
credit if it
balanced
was
here.
him.
Um, I think it was last week. Someone on Lost Dog asked you guys a question, and I've been repeating this to people because I just thought it was such a good analogy that if you're going to, if you want to trade, but you're going to be constantly scared of the monsters under the bed, then don't
Yeah,
trade. And
yeah,
that's
that
I
was
thought
Tom.
that was
He
a
said that.
great analogy for black swans. Like
Yes,
they're black swans for a reason. We can't
right,
quite see them, but
right.
I like to look at the market, and the analogy I use with people is there's two different types of events. You got one that's a tornado, and that's a black swan. It hits. What are you going to do? It just happens. You live through it. You figure it out as you're going through it. But then there's a hurricane. And
Yeah,
with a hurricane, you see it coming. You can board your house up, escape, get everything off the ground. Like you can plan for it. And
sure.
so to me, it's like there's two different types of events. And the black swans, the tornadoes, they don't happen frequently enough to, in my opinion, constantly sit there and be paranoid about them. And I think the best way is to trade actively, make good decisions, get profits so that when they
Size,
happen,
keeping your size relative to your
your
own account
size.
size.
Yes.
We'll say trade small, trade often. I mean, that's a little bit of a cop out because what's small, what's often. One investor's floor is another investor's ceiling. But if you're not leveraged, you're small enough. In my point, if you're not
Yeah.
100% all in. Now listen, when I had a $5,000 account, I was all in every day, and I was taking 100x leverage every day, but the market allowed it because there were no guidelines to it that you couldn't, and it was kind of like I only had $5,000 to lose anyway, so why the hell not? Today the market's a lot different. You got a lot more parameters. You got circuit breakers, which we didn't have back then. You have a lot of other things. So if you're using in this market environment in a relatively large account, let's call it over $100,000. If you're using 25 and then you're daily, if you want to use 100% of your account, go right ahead because it's a daily trade. It's feast or famine, and it's expiration that day, and you're all done the next day. You don't have any black swan event. You have intraday you risk, and if you're watching the market and you jump in front of it all in both feet, well, you get what you deserve, kind of thing. So
Yeah.
if you're trading 45, 90 days, that kind of thing, you're using 30%, 25 to 40% of your account, you're small enough in my mind, and you're quite invested.
Yeah. And, you and Scott were talking today about diversification.
Mhm.
And, when you guys talked about it, and then I think you piled onto it about strategies. See, when
Yeah,
I think diversification, when I talk to people about it, I talk about like, don't just be an AMD, NVIDIA, Micron, like spread it out to different underlines, but also diversification in your strategy. Don't
yeah,
just sell puts, have calls on as well, have strangles on, maybe some spreads, maybe a Jade Lizard, right? Strategy diversification, I think, also helps keep everything balanced rather than just being a one trick pony. Seems like everyone sells puts, like, oh, I'm a genius, in up market. And then
yeah.
all of a sudden, I don't know how to sell a call, or I'm too scared to sell a call because
Sure, sure.
it's too risky, right? It's like,
Right,
well, is it?
right. I agree. I agree.
so, okay, yeah, so and I thought it was a great segment. It was funny because you guys were talking about it, and I was like, well, what about strategy? And then there you guys come in about strategy. I'm like, there we go. Of course they talk about that.
We get around to it eventually.
Yeah. Um, so we were talking about the debt markets, okay,
Hmm.
especially in the private credit markets.
Hmm.
Is there something there that causes you any kind of concern? I mean, we see a lot of these credit default swap spreads growing. We see, obviously, I mean, Google just went negative free cash flow. SpaceX obviously sucked up a lot of capital. Anthropic's talk about going public. Jensen, yesterday, roundtable with Goldman Sachs, BlackRock, Blackstone, talking about making data centers and GPUs a asset backed class of an investment. Is this, in your opinion, kind of just a natural part of a new evolution of the economy and technology, or is this a true Michael Burry, like, you guys are getting way over your heads here and this is going to fall apart? Like,
I don't
I
think
know
it's the
you don't
latter.
know. Okay,
I
go
don't think
ahead.
it's the latter. I think it's the first part, like you said it. I think markets evolve, markets move. They certainly change. Um, I just think this is, and I hate to say like because I'm a firm believer. There's nothing new. Like it's not different this time. But you can have like when they said 0 day options were going to create huge amount of volatility in the market. They did nothing but, if you want to equate that 0 day options came out and volatility went to all-time lows and stayed lows and had never perked up. If you want to say that those two were synonymous with each other, then it was completely the opposite of what everybody thinks. And I think it's kind of one of those stories today. I don't know if it's going to be a big tradable market like the rest of the market, but it certainly seems like it has legs, and I don't think it's a Michael Berry thing at all. He's kind of schmucky to me anyway, so I can't go back with him. So I apologize.
No, no,
It's
I,
my
I
opinion. I mean, they're like armpits. There's usually two opinions. They usually both stink, right? So who cares?
I've never heard that one.
Yeah.
That
Mhm.
was a good one. All right, I'm going to steal that one too. I'm going to steal all your lines here.
Go ahead. Go ahead. I don't know. I'm not gonna be around forever, man. Somebody has to do them.
um, okay, well, so I actually agree with you. I think you know I've seen I'm pretty in this world when it comes to data centers and AI and a lot of this stuff, and the usage of servers, of data centers, the longevity is growing. So when I heard them talking about that yesterday, part of me was thinking like this is kind of obvious. Like, yes, they're depreciating, but so is a car. Yet we still use the car as collateral for the loan.
Sure.
So I don't know. It made a lot of sense to me, but I
That
didn't know
that
if I
the
was
company
just
who's giving you the insurance for it doesn't own the car.
yeah.
Think about it. Like, you own the car. You didn't even put down all the money, for argument's sake. You didn't even put down all the money for the car, so you borrowed it from somebody else. And then an insurance company who has no part in the loan or owning of the car tells you, I'll make good on the car. Think about how crazy that whole thing is. If I was just planning that as a business model for you, you would say, this doesn't have legs. I'll go one step a little easier for you. Look at what we're doing right now on the internet.
Yeah.
Like, we have a Zoom call on the internet that's going to go out and live forever into perpetuity in some place. When
Yeah.
the internet first came out, because I was there when it first came out, it was only going to be used for porn. There was no other application for it. Now we do everything: plane tickets, phone calls, Zoom calls, internet, TV,
Trading.
movies. Who knows where this is going to go to?
Yeah. No, that's a really good point. Yeah, I think it's just the next evolution in everything.
And porn, that was PORN. Sometimes my New York accent comes out there and it might be PAWN. That's not what I was talking about. Not like a shop.
No. I'm sure everyone caught that one. Don't worry.
All right, good.
Yeah. Um, okay, so let me ask you kind of a little bit of a different question. It's going back to trading. So I like to. I mean, maybe this is simplistic, but I always tend to see the market as there's three different ways to trade it, is the way I see it, especially with options and mainly premium selling. You've got a very obvious down market, which we kind of saw like January, February, March. Then you got a very obvious up market, which is like April, May. And then you got kind of like a two-sided market where it's like, all right, you can sell calls, sell puts, both. And I would say this year's been a little bit of an anomaly where you've kind of had more of these drastic, like one-sided, like, man, everything's just selling off over and over. And then, here we go rebounding. Maybe we saw a little bit of that last year after the whole tariff stuff. But from April to November, you just had to sell puts. You didn't have to do anything else. Like, you look like a genius.
Yeah.
What do you do to stay, I don't know, I want to say inform might be the wrong word, but how do you make decisions on how to set yourself up properly to either be more on the selling put side or selling call side? Are you just looking at call skew versus put skew? Because the whole market's had call skew for a while now. Like, how do you assess it from just your experience, your reps and volume of trading?
So I'm kind of simple. Like, we actually had this discussion today on Lost Dog, like with Tom for a real brief second. Like, he wants to sell the top. I want to sell it 2, 3 days later, and he says it's very hard to do. I don't find it very hard to do. I might find it very hard to do if it went down for 3, 4, 5 days in a row and didn't have an uptick. I would probably sell that first uptick kind of thing. When we get into a range, volatility is high. I do a call ratio spread, or I do something with some thought behind it, or an iron condor with more calls than puts, or a wider call spread, that kind of thing. Something that gets me engaged. And then once I'm engaged, I have a position. It's a lot easier to add that because the market tells me what to do. The market continues going lower and I lose my short delta, I have to add more short delta. If the market goes higher, I've got to do something about that. I got to add a little bit of long delta. So really getting in is the first hardest part for me. And for me, I'm not trying to get the top. I'm going to miss the top and I'm going to miss the bottom, and I'm going to hope to make money, in between there. And that might be a little bit of a cop out. So I'll answer it directly, because on Grow Your Pile, we have portfolios. We have $1 million portfolio, $1 million+ portfolio that we do a little bit more of a longer term take. And we have like a 200 and something $1,000 portfolio that we do a little bit of shorter term take on it. I have some Q puts. It's a long leaning portfolio. On about $200,000, we go anywhere between, on average, about 200 and 700 long deltas on that portfolio, only using around 35%. Everything that we talked about here on the show, no magic. We just show people how to do it in real time. And I usually have anywhere between 3 and 4 naked short Q puts in 1 to 10 day options. Today I have one. So I usually have 3 or 4. Today I have one. And I've had one for the last week or so, for the last 3 days or so. Prior to that, I had, 6 and 7 because the market had sold off, selling to strength with long delta, wanting to lean long, rolled a couple of times, not exactly right at the bottom. But when we started to rally, we were able to keep rolling up and up and up, and it ended up working out to be a nice trade. On that same $200,000 account, we may have up to 7 or 8 SPY out of the money puts in 45-day options, somewhere around the 25 to 35 delta option, depending on what my opinion of the market is. If I think it's more bullish, I'm going 35 delta. If I think it's less bullish, I'm going 20. Nothing fantastic, just my own market opinion. Well, today I have 4. So how do I, do this? Well, I'm still in. I'm still longish delta, but I'm not as long as I was, and I'm looking for an opportunity. Now, the last 3 days, I've left money on the table. If I had 7 puts and 3 puts and Qs, and we have other assets that we buy, stocks and stuff, but it's just shares, nothing really monumental. I've left money on the table. Did I benefit from the move lower and capture that? Yeah. For the last 3 or 5 days or week or whatever, I'm making a little bit less than I should, but I'm making money, not losing money.
So it sounds like not only are you essentially taking the direction the market gives you and leaning into it, but you're also scaling in
Yes,
order to,
yes,
yeah. So your size, obviously,
fluctuates,
well,
but I
yeah.
I always try to lean a little bit with that delta. Like I have to make a decision this week, and I was looking for a down day. Today was the first. You had a 100 handle move, and I've learned something with these Q short dated puts, and I'm talking somewhere between you know 3 days and 10 days. You get about 100 to 150 Nasdaq points overnight move cushion. So if you sell an option in the Qs with the 3, 4, 5, 6 days, and it's out of the money, let's just call it right at the expected move, so it has around a 25-ish delta, and it's trading anywhere between $3 and $6, depending on what volatility is when you put them on at that time. Like right now, volatility is low; they're only about 3.5 or $4 in that time frame. If the Nasdaq goes down by about 75 to 100 handles, you're even. Like that's the juice coming out of it. So you've got about 100 handle leeway by putting on these naked puts in the Qs. Now you got to be bullish on the market, so it comes down to size. So for my size account or that size account that we're doing, I think you can have around 3 or 4. I presently have 1.
Okay, that's it. I'm gonna have to take a look at that. Do
Yeah,
some.
you should. You really should. Now, Q monthly implied volatility on these like 10-day options is 18. Like the monthly implied volatility is 18. It was 35.
Yeah.
3, 4, 5 weeks ago. So the environment's changed, and we're still continuing higher to nowhere, right? I mean, we're just like you said. Talked about it on Lost Dog. It seems like we're consolidating on this melt
Agreed.
up, and we're looking for this next move, whether it be up or down. I don't know, but we're looking for this next move. So right now, I'm willing to leave a little bit of money on the table to maybe benefit or not get hurt as much if we go in the opposite direction.
Yeah, I mean, it's again, never know which way it's going to go, but it feels like the market wants to go up. I mean, the
Yep.
fact that we're at these levels and SanDisk is essentially cut in half, Micron's down by 30%, Tesla's down way from all-time high, SpaceX is obviously way down. I mean, like it's the ones that you would have thought would be saying, "Hey, we're topping here."
Yeah.
You Yet we're in tops, and those aren't even participating. It's like,
But the
oh,
rest of
okay,
the market has put itself on its back. I don't
correct.
want to say like stupid stuff like Dell and Caterpillar and uh, Nimbus is another one. I think it just
Well,
came out. I think it's up
CoreWeave,
$10.
no, CoreWeave just reporting.
CoreWeave. Yeah, I mean, like it seems like we have a board of stocks that we look at, and they're the popular ones. And you're right, they look like shit.
Yeah.
And then the market's unchanged. It's like, well, it's not voodoo economics. I mean, it's not Reagan anymore. I mean, something is holding up the market somewhere else. So, you know, seems like a rotation. And now we got to figure out if that rotation is good or bad. And the market will tell us that.
Yeah, no, I agree. You talked about the juice coming out, and it's something. This is something that I think about a lot, and I don't know how to properly think through it. But I tried, barring anything big event coming up that I want to avoid. I try to avoid the avoidable. Um, but I try to go into the weekend with trades on. So normally I
It's
try to make
paid.
sure. Pardon?
It's paid.
Yeah, yeah, yeah. Well, that's where I'm going. So
Yeah.
I try to make sure I have trades on by like Thursday morning.
Mhm.
And really, it's because I've heard you guys talk a lot about you don't know when the premium is going to get sucked out.
No.
It could be Thursday, it could be Friday, it could be Monday. How can you maybe explain that a little bit? Like how do we know? How do you know to look for, and how do
Yeah.
you take advantage of that if there's anything to take advantage of?
Unfortunately, you can't take advantage of it, but you could take advantage of knowing that it's not an absolute thing. So if you look at forward slash VX on Thursday and
Hmm.
you have a bullish volatility, meaning volatility has gone higher, you could bet your ass that Friday is volatility is going to stay bid going into the weekend. That's the way I would look at it. If volatility is low on Thursday or continues lower, especially if the market does nothing or goes a little bit lower, like today, you had the market, even the S&Ps were down around 20 handles or so. Nasdaq was down around 100 and change, but I think it rallied back near the end of the day. And you had forward slash VX at 1675 or 70 or something like that, actually down a few pennies. Volatility is coming out across the board so far. Now, tomorrow, if you were to get a market that's the same as today and you got volatility bid a little bit, with volatility at historic lows, I don't think you're going to get a lot of volatility coming out over the weekend.
Yeah. No, I
But
agree.
there's no way to judge it.
Yeah. I've been.
Like I can't. I wish there was something I could tell you. But I will tell you this: so volatility stays unchanged. But as a market maker, or a liquidity provider, or anything else like that, I run the numbers on Saturday's numbers. So it's Friday at 10 o'clock in the morning, but I forward date my computer to Saturday at noon. So my volatility stays the same. I didn't take the day risk out, but I've moved my clock forward. So those options are slowly decaying, but not as much as if I moved the clock forward and lowered volatility. As the day progresses and stay on, I go to Sunday's number. So the market doesn't move. That option was trading for $3, but now I'm trading on Sunday. That option's worth $2.90. And then sometimes at the end of the day, you'll get a nice volatility crush on Friday because nothing really happened. All the news or whatever has come out. It seems like
Gotcha.
it's complacent, and then you get a little bit of a push.
But one way or another, that
Yeah.
it comes out. The juice has to come out one way or the other.
Everything goes to expiration.
Yeah.
Everything goes to parity on expiration. Yes,
Yeah.
100%.
Okay. Yeah. Because then I also wonder. I mean, again, I don't know if this is just luck since I've been trading that I see it benefiting, but like the week of Thanksgiving, before
Yeah,
Thanksgiving, I'm making sure that, starting early November, I've got trades on because I don't know when, but there's a week there that is going
right,
to be dead.
right.
Is there something there? Like, how do market makers think about that going into Thanksgiving week?
Well, I don't know, but I'll tell you this. So I've never been a broker, but Thanksgiving week, I forget what, the Thursday into the Friday, I forget what year it was. It had to be around 90 or something like that. The broker next to me, who's a very nice guy, nice friend of mine, um, he asked me to be a broker for him for the day. And on the CBOE, if you were a broker, you couldn't be a market maker that day. If you were a market maker, you couldn't be a broker. You had to disseminate at that in the
Mhm.
morning what you were going to be. A broker takes your orders, your customer orders, does not trade for himself. A market maker takes no customer orders, only trades for himself. At the mercantile exchange, those son of a bitches could do both. And that's like Dracula watching the blood. Because if I get a big order coming in, you can sure as shit because it's human nature. 5 or 10 is going to go out for the bat account first, and then I'm going to push the market a little bit lower. 5 or 10 is going to come back. It's just, or I'm going to nudge somebody. It's just human nature. If anybody says they ain't going to do it, they're freaking lying. So let's put that to bed. So the CBOE did it the right way. You can either be one or the other. He asked me to be a broker that day. It was the busiest Friday we had in the year. I believe the market went lower, but back then, 50 handles was a huge move. I was swamped with orders. It was pandemonium. So I don't know what to do for Thanksgiving or any other holiday. You never know. It's completely random. There are those that will say there's not a lot of liquidity. You can move the market a lot more. There's some warrant. There's some to that. And then there's others that say that there's nobody there. There's nothing going on. There'll be too many bids and offers because there's no liquidity anywhere. It's going to be very complacent. Most times it's complacent.
You, uh, yeah. So in my experience, it's been complacent. Like I said, I
Yeah.
try to make sure I have trades on early because I don't know how it works, when they're going to suck out the premium, if they're going to, what's going to happen. So I just like to have my trades on, and what
Right.
happens. But I do think there's some truth to the lower. I mean, I know there's truth
Mhm.
that when you don't have a lot of volume or a lot of activity, you can move the markets. That
Yeah.
actually happened this past year. I mean, I'm assuming you're aware of this, but I'm sure you've heard of Captain Condor or
Yeah. Yeah. Yeah.
yeah,
Yeah. Yeah. For
that
sure.
was
For sure.
Christmas Eve when all
Yeah.
that happened. And I was watching the Slack messages that were coming through from his group chat in there. A friend of mine was in it, and it was the saddest thing you've ever seen. So yeah, it can people were getting blown up left and right.
Well, that's another case of what? That's Leopold to a
Yeah,
small degree.
yes.
Look at what they were doing. They were putting on these iron condors. If it didn't work, they doubled up. If it didn't work, they doubled up again. If it didn't work, they
More
doubled up
than
again.
double
What's
because they
that?
had to more than double because they weren't just trying to make their money back; they were trying to make their money back and then some.
A
Yeah,
double, double, double. Yeah,
yeah.
double up to catch up is what we call it back in the day. I mean, it works until it doesn't work. Now,
Yeah,
statistically speaking, if they could have held on, it would work. But nobody has unlimited funds. That's why it's so much easier to make money on a percentage basis in $1 million account than it is in $1,000 account. It's just
yeah.
easier to make 50% in $1,000 account than a $1 million account, but it's easier to make 10% consistently or 20% consistently in $1,000 in $1 million account than it is a $1,000 account.
Yeah, I mean, it also, I mean, to me, when my buddy was doing it, like I taught my buddy how to trade. He never touched options or anything before that. He was a big crypto guy, and then he got hooked, and he was doing so well. He was crushing it. 20, 40, 50 grand a month, like consistently over and over. And then I think people, they learn a little bit. They start to see something working, and then, well, let me experiment with something else. Why
Right.
would I keep doing what's working? Let me go experiment. So he
Sure.
went and experimented, and he didn't get caught up in all that. Luckily, he missed they called them like these cycles, these zones that they had, but he missed this one, luckily. But I was telling him, like, this like goes against like everything I told you. Like,
Yeah.
you're not staying small. You're actually getting bigger and bigger and bigger. And yeah, it's just size.
Hey, even go to Leopold. I mean, his original investors or his people that stayed on the longest, they're extremely happy with him. They made boatloads. They didn't make as much as their high watermark,
Yeah.
but they made boatloads compared to anybody. They can go to any party in the world and be very happy with the returns that they made. It's the last people that got in, or the people that got in the middle that didn't benefit.
So what are your thoughts in general on margin, on buying power, using them as a combination? Like how do you think about that? I mean, obviously, you know, you're at a different point in life. You've made your money at this point, but
Well,
for
I mean,
people who
I'm still listen. I've been an investor in Lost Dog since the very beginning, long before Tasty Live let me go. I've had other businesses that I've been investing in. I was retired for 2.5 hours. I'm not interested in. I have a second home, but I don't get to go there that often. I'd love to be on my boat that I do not have where I live here in Chicago. But I mean, I like building businesses. It's funny because I got a buddy of mine who's my ex brother in law, who I love dearly, and we've been friends since we went out with sisters. We both ended up marrying sisters. He's still married. Fortunately, I was divorced, and now I've been married happily for 22 years. Very, very happy. 17 years the first time. I got a lot of 39 years under incarceration. I've done my time. He's asking why you keep doing it. You have enough, and I have more than I need, and I'm very fortunate. And one investor's floor is another investor's ceiling. There are other people who are watching this that have 10 times the amount of money I have, and they're happy or unhappy. That's not it. It's just that if I see $100 bill on the floor, I still want to grab it. I still want to smile at the end of the day, knowing that I slayed the market or I did something right.
so,
When you lose
okay,
that, then I'll stop, I guess.
no, I trust me, I 100% get it. It's you know, it, until like I didn't realize how much I don't know if I've ever talked about this out loud, but I've always been into making money, always. And like from a young age, I think I told you last time, my stepfather opened up a custodian account for me when I was 13. And that's how I got into the stock market. And then eventually I stumbled upon options. And the way I discovered that you could sell options was I accidentally sold a put when I was trying to buy one. And I was like, wait, what happened here? How am I up percent? But like, where'd the money? And then next thing you know, and eventually I stumbled upon you guys. I didn't realize you guys were a show or anything. I thought you guys just had these like little videos every once in a while. So I didn't like it was just an idiot. But I never want to touch anyone else's money. I only liked my money. I never
Mhm.
want to go into investment banking or anything like that. So, I went engineering degree, did that whole career. But people always talk about do what you love and like
Yeah.
you won't work a day. And I always thought that was the stupidest thing I ever heard. It's like that, like I didn't resonate with me because to me it's like, no, I want to make money. I want to go, I want to get a really good engineering degree so I can go make a lot of money. I want to make six figures. Like that was my thing. But
Mhm.
now full circle here in my mid 30s, with my newborn son and all that. And now I find myself like the best advice I'm going to give him is do something you love because I finally realized what I love. I love this. I love the markets. Like I just didn't realize that could be like something that sustains you. And so yeah, it's like a good day, a bad day. Like it's so much fun. It's so mentally challenging. It's so stimulating. Being able to talk to everyone does things a little differently. It's man, I don't think there's anything that's more interesting than this game that we're all playing and the dynamics and I don't know. So I kind of get what you're saying. Maybe I don't get it
No,
because
you get it.
you'll get it
You get
more
it.
in 30 years,
Mhm.
but I get a piece of it.
Yeah, yeah. I mean, listen, I'm not digging ditches. You know what I mean? If I was digging a ditch, I'd probably have a different, and it was $100 on the floor. They said dig the ditch. I'd probably say, I got enough money. I don't want to dig any more ditches. I'm clicking a button. I'm making fun of my friends. I'm getting accolades from young men like you. I mean,
Life's
it ain't
good.
so bad.
Yeah, yeah. Well, so do you think with all this AI stuff, I have my opinion about this, but I'm curious about yours. Do,
Yeah.
do you think that eventually all these agents, these bots, whatever people are going to build, that it's going to disrupt the game, maybe make it so the markets are too efficient, maybe, or that there's going to be no need for a Tony, a Tom, a Nick, a Scott. Like, do you see that happening?
Um, the world will always need characters, but I think that, and I'll go with my son who's doing 0 days with a company they're calling Robin Maria and Tone and Nick Batista right now. I don't know what they're going to eventually name it. You find them on YouTube also, and I know you love Nick and you've talked with him before. They're doing 0 days with an automated system, doing a couple hundred trades a day in SPX, and they have losing days. I mean, losing weeks. They're net profitable by about 50 or 60%, but they have losing days. It's not a little person's game. It's a well capitalized game. But I don't think that it will be so efficient. Here, I'll tell you why it can't be so efficient. How many liquidity providers are there? 15, 25, 35. I mean, there's new liquidity providers every day. Some take a bigger piece, some take a smaller piece. You got the Citadels, you got the Jane Street, they're big guys. You got smaller people who are doing it. You got other smaller firms that are doing it. They're all finding edge. If
Yeah.
these brilliant geniuses are all finding edge somewhere and they all have different markets, it can never be commoditized that it's going to be like a pick 'em market and it ain't going to move anywhere.
So I think I come to the same opinion. The way I look at it is, for every agent that you might build, every great LLM, ChatGPT, whatever you build out, there's going to be a counter to it.
Sure.
And the way I see it, it's just another market participant adding to the pile. And to me, that's what I think is awesome about the market is it balances out one way or another. So it doesn't matter how great a bot is, an agent, an algorithm, a quant. It seems like it all eventually it comes down to, I don't want to say breaking even, but to somehow neutralizing. And it's not like
and they're not right 100% of the time either. Maybe it's 85% of the time, maybe 75% of the time. And they have to be position sized properly that they could stay with their model when it's not working. They get too big also. And then they have to throw their model out the window because they can't afford to stay with it. So there's always going to be outside the expected moves. There's always going to be, I don't know, Kramer, which I can't stand. He says there's always a bull market somewhere. There'll always be a market somewhere for opportunity.
You don't love him? What are you talking
No,
about?
I can't stand him actually. I was supposed to be on CNBC. They didn't take me.
Yeah, were you supposed to be at the desk with Josh and Pete and all those guys?
All the rest of them, yeah. Back in the Thinkorswim days, long story short, we sponsored Options Action. We created that.
Oh yeah.
We created that show, and they sent me to New York to, kind of interview for it. And the excuse they gave was they couldn't have, an insider in Thinkorswim who was sponsoring the show beyond the show. I think they just didn't like me.
Oh, well.
Their loss. I'm still here.
Yeah. I mean, like, who they had the Nigerian guys on there.
And, yeah.
I don't know much about them.
Mm-hmm.
I know they got a book.
Pete stood right next to me in the AOL pit back in the day.
Oh. Tall guy. Right?
Tall
you guys
guy.
are all tall.
Tall guy. Yeah. Good football player.
Yeah. Do you think everyone, or not everyone, do you think most people who are self-directed investors should trade options or at least learn about options?
150%. Why not? Listen, we work so hard to save our money, invest our money, and then we don't know what we put it in. I mean, like, somebody will say, well, no, I'm invested in Vanguard. Which one of their million funds are you in? I don't know. The one for good people. You know what I mean? Like, they don't even know what what they're invested in. So 100%, you save yourself the fees. You could do it yourself. There's so much information out there. Basically free. Commissions are basically free. They're going to go to free. So it's happening. Just learn it. Take advantage of it. Be an opportunist son of a bitch and prosper.
I love that. you guys, when I say you guys, I mean Lost Dog.
Mhm.
Uh, you guys put out a video about the myth, or I call it the brainwashing of passive indexes,
Yeah.
and I loved it. I've been talking about things like that for so long, and that video, I don't know the gentleman's name, but he did a fantastic job. I posted it onto my ex. It must have gotten like 40, 50,000 views. And I was literally just saying, like, this is what I've been telling you guys. This is so, I couldn't put it in better words. It's all BS. You just don't know who the fund manager is.
Right.
They're rebalancing, they're deciding is SpaceX going to be included? Are they not going to be included? Like all that, you just don't see the money manager. It's
Yeah.
not passive. Like but you guys is such like, I hope you guys keep doing more content like that, because
Thank you. I hope
that was
so.
so well done.
Thank you.
So, and if you got to go, just let me know, because
Yeah,
I'm.
I got a couple
You
minutes.
may be from New York, but I'm Spanish, so I'll just talk.
Okay, go
So
ahead.
you gotta tell me shut up. I gotta go. I gotta eat. I gotta go have a cigarette. Yeah. Um, uh, with regards to, you guys have been talking a little bit here and there about what do you think is going to happen with the SpaceX and Tesla merger. Tom seems to think it's done. It's going to happen. It's going to happen.
Yeah.
What do you think about that? First of all, like, do you think it's going to happen? Do you think it's inevitable?
Yeah. I don't know if it's sooner rather than later, but I would venture it's going to be a little bit later than sooner. But yeah, I think it's inevitable.
And how do you think something like that happens? Like, there's a lot of commentary on how it could or could not happen. So obviously, from a Musk perspective, he wants SpaceX to be the controlling factor because it benefits him from control with his voting shares and all of that. Do you think this has to be something like a merger of equals? Do you think that it's something where SpaceX would have to offer a premium for Tesla shareholders to vote yes on this? I mean, like, how do you think this? I mean, you've probably seen and more of these than I could even think of. So I'm just curious, like, based on what you've seen, like, how does this end?
Unfortunately, markets are evolving and moving. I'm going to take a step back first before I answer. I've been an insider in publicly traded companies. I couldn't say things that I knew was happening or going on because that was the rules. And then all of a sudden, you got a guy like Elon, who was an insider in a company, obviously knew a lot more than the company I was involved in. And he said every freaking thing he wanted to say on X and never got into any trouble or anything else like that. Batista, they would have sent to jail. Elon Musk, they put him on a pedestal because he's a boy genius. Love him or hate him, you got to give him some props. I mean, he sends with his team of geniuses. Tom's a genius too, but he's got Scott, myself, and we had 250 other employees behind us doing that too. So I mean, it's the team that you assemble, but you're a genius in your own right. He's a genius in his own right. He's changed the game, and if they say they're going to give him $1 billion, if the company goes to $10 billion, then and he makes the company go to $10 billion, give him fucking $1 billion, and who gives a shit anymore? You know what I mean? I mean, if you're gonna don't fade a superstar. The man's a superstar. You might not like him, you might love him, but you can't fade him. So he'll make it happen. Whatever's advantageous for him is the way I'm going to answer that.
Okay, yeah, no, that makes. I say that all the time.
And he's allowed to. I mean, if you're in a small town and you're the only one who sells Cubano sandwiches, because you're Spanish or Cuban, right? You're the only one. I think I got a little Spanish in me too. So you're the only one that sells Cuban sandwiches, and all of a sudden they freaking love those sandwiches, and you're the only one that's selling them, and you want to raise them by $1. Everybody can hate you for raising for $1, but if they still come, it's what the market's going to bear. It's the same thing with him. If he still produces and he still does everything he's going to say he's going to do, and I know the subsidiaries from the states and everything, but that's their business. That's what they gave him. Like, just because he was opportunist enough to say, hey, that's a great deal for me and my company, I can't fault him. I got to fault the people who made the deal. Like, get mad at your government or get mad at the state or get mad at that. You can't get mad at him. If you're going to throw steaks at him, he's not going to say, I only want hamburger.
No, that's a fair answer. And I like what you said about not fading them. I always say, don't bet against winners.
Yeah.
It's like no matter what you think about
you
Trump,
can root against them if you want to. but
Yeah,
don't bet
go for it.
against them.
Yeah, exactly. Yeah, I always say like whatever you think about Trump, whatever you think about Besant, they're winners when it comes to the market.
Yeah,
Besant's not an idiot. He worked
yeah.
under Druckenmiller, under Soros. Like he knows what he's doing with the markets. I'm not betting against them. I
And I
think
know
betting.
he had his fund that went belly up or whatever the case may be. The market didn't cooperate. I
Yeah.
mean, it's the same thing like the Leopolds of the world or
Yeah,
anybody
yeah,
else.
don't bet against them.
Don't
Yeah.
bet against them.
Yeah, he's back at it already, right?
Yep. Yep.
Yeah. So okay, if they merge though as a
Mhm.
company
Mhm.
and they become one, is that do you think that's good for markets?
No.
Is no, okay. Say more. That's interesting.
No, I mean, I'd rather have two very tradable companies than one conglomerate that would probably not have great markets.
Really? You don't think they have great markets?
I think they'll get wide. Like, does SanDisk have great markets? Does Dell have great markets? Option
Nvidia
market.
does.
What's that?
Nvidia does, and they're
Nvidia has great markets.
way bigger.
What's Nvidia's implied volatility compared to MU or to SanDisk or to Dell? It's got to be a fraction.
Yeah.
I think that company like a SpaceX Tesla combination is going to have a very high implied volatility. It's going to have wide markets, in my opinion.
Okay. And well, market makers will like it, right?
Yeah, yeah, yeah.
What's your thoughts on Anthropic, OpenAI, and them going public? Do you think
I love
the
it.
market can absorb that?
I love it.
You
I
love
love
it?
it. I'm not. I got to take a step back here because I'm a little bit of an investor in some. So I love that it's happening. You know what I mean? I think anytime. I mean, you want another Chipotle to trade? I mean,
Yeah, I got you.
or do you want another Nvidia to trade, or do you
Oh
want
yeah,
another MU to trade? I think it's going to be another stock that's going to provide, you know, fuel to the fire for a lot of people who like to YOLO.
can the market support it though? I think
Sure.
you guys were maybe you and Tom were disagreeing about this right before the SpaceX IPO, but I think Tom was saying that will be the top of the market. Uh, you know,
Wrong.
Yeah, I think a la like what AOL kind of
Yeah.
moment. You're right,
Yeah.
wrong, but maybe not, right? Maybe it was just a little delayed. Maybe just waiting for Anthropic to come
Listen,
out.
it got frothy. I mean, you know, the market has here. If you've been watching the market for the last year, every Trump in the beginning of the year, every Trump tweet, market SPOOs moved 100 handles higher or 100 handles lower. As they progressed, we moved 10, 20 handles. Oil, straight, ship sinks, no ships, good ships. Market moves 100 handles, 100 handles. Now it doesn't move it. But the market digests everything. It has a hard
Yeah,
time in the beginning, but the market digests everything. And I think the market will digest this just like everything else. It will have some volatility to it when it first comes out. But as things go on, I mean, Apple had volatility. Apple volatility when it first came out, monthly implied volatility was in the 40s. I think
mm,
Apple volatility is as low monthly. I mean, I can look right now. I think Apple volatility is as low monthly as it is in an index like SPY. Let's see. Monthly implied volatility in Apple is 24, and in SPY it's now down to 12. So it is half of what it was. But if you look at the Qs, it's probably in line with it. The Qs are just under 20 now. Qs were 35 2 weeks ago. So I mean, markets absorb everything.
yeah. Do you think the markets have already absorbed the potential of rate hikes?
No.
No. Oh, okay. Interesting. All
Yeah.
right.
Yeah. And I
that
think
that
the first rate hike will be a relative non-event for the market. The fact that there might be a second one or the hint or the whisper of a second one will be a little bit bearish for the market.
so you am I hearing this right that you think there will be rate hikes?
I do.
Oh wow.
I
Okay.
mean, the bonds will tell you. I mean, we're right there at 109. I mean, here, 107, we have two rate hikes. 110, we have no rate hike. 109, we're kind of in no man's land. I think he missed the boat the first time. Probably should have raised rates by 0.25% and been proactive and spun it as a proactive thing, um, I think it would have been well received. Um, Now, it's like borrow money when you have to, not, borrow money when you can, not when you have to. And I think now they're getting to
Do,
the point where they might have to. And I think the market is pushing their hands a little bit.
okay, but so I feel like it's.
If we go down 300 handles from here and we're 7,400 on the E-mini S&Ps, did the rate hike hurt the market? Or are we just coming 50% retracement from where we were 3 months ago? I mean,
No
it's
idea.
all how you
Yeah.
spin it, right?
Yeah.
So I don't think the first rate hike we're 7,000 on E-mini S&P.
Well, I mean, you could say the same about them skipping the rate hike this past time, right?
That's
Like
correct.
at first,
That's correct.
genius, then the
That's correct.
crash, and then
Yeah.
everyone said, "Oh, that was just Leopold." Turns out Worst did the right thing. So is this
Yeah.
zigzag on justification? Um,
It's an
okay,
opportunity.
yeah, no, absolutely.
History
Okay,
will write whether it was right or wrong, but for today, it's an opportunity.
okay. What are you trading these days? Like, what are your go to stocks, names, strategies? What's a
I,
Tony?
I've been staying a lot more towards the indexes like SPY and Qs. I've been doing a lot more Jade Lizard type strategies because I have felt the last couple of weeks that the market move, if it was going to be outside the move, was going to be the upside. So I wanted to find risk to the upside. So I'm selling a call spread and a naked put, bullish strategy. I've done that in many stocks, Apple being the most recent one, Nvidia, all on down ticks. I like to do them on red days. I do not like to do them on green days. Like when volatility is expanding, usually on a red day in the indexes, volatility will collapse on a red day in the equities like Apple and stuff. So you take a little bit more directional bias in those. That's been my two things. I've stayed away from strangles with volatility being so low right here. My bias was the market was going to go a little bit higher, so Jade Lizard fit my bias. Market, whether it cooperates or not, validates, like history validates whether I was right or wrong. It's worked out so far. I am trading a few shorter dated puts, like I told you in the Qs, but I have a minuscule position on compared to what I've had before. Same thing with SPYs. I think we have positive drift in the market. I don't think that's changing,
Yeah,
even at all-time highs. I am looking for a down move to invest a little bit more, but on these 0 day or these shorter dated 6 day, 10 day options, I think you just have to have them on and put your ego behind you or your Nostradamus opinion on what you think the market's going to do, and just keep it in your parameters. I should have 3 or 4 of them on. I only have one on.
okay. So yeah, so that's interesting. So
In stock that I like to trade, I mean, I have long positions in AAOI, AVGO, Nimbus, Google, Hood, Microsoft, Nvidia, Palantir, PPLT, some silver, some gold, SpaceX. Smaller position now than it was before. It was one of my larger positions when it was in the 115 handle, on its way to 105. I didn't buy it at 105. Now it's 130. It was 140 yesterday, and I'm out of most of my position in there. SPMO is another one I have on. I love doing SPX, broken wing butterflies. When the market sells off for 2 or 3 days, they print money for me. I do that all the time on
Mhm.
Grow Your Pile. I mean, I always look at it as like, listen, you want to put $5,000 in the market and make $300 in 45 days. You do the percentages. It's a nice bang for your buck. That for me is an income type trade.
Do, with those stocks you mentioned, are those just you trading stock itself, or is that you
A little
selling
bit of
put?
both. Like AAOI doesn't have greatest option markets, so it's
Yeah,
more stock in
small.
it. I bought that stock at 100 or 102, I think, on its way down to about 80 and change, and I was I'm never all in because I think I'm wrong. I bought it late in July. It actually bounced right away, and I was up by like $10. It promptly sold off and got, I think, into the 70 handle. I didn't buy any in the 70s. I bought some in the low 80s, 80, 81, 82. It got up to 140 ish or so, and I let some out at 130ish where it is right now, some out at 140ish. Some option strategies, not a ton, but other stocks like Nvidia and stuff, it's all options.
Okay. And do you normally like if those are? I'm assuming those are trades, right? Those aren't
Yes.
like just
Yeah.
long term buy and hold kind of thing. They're actual trades.
I mean, here. I mean, since you're asking me, I'll give you the real number. I do have longer term positions. I am a man of means. Uh, I'm, I'm flexing and busting balls here a little bit. Okay.
It's
Um,
flex, man. Flex. We see those biceps, 60
yeah.
something of
Right.
those biceps. Don't think no one's looking at those.
My largest notional position is in AVGO. I've had it for a long time. Nvidia is second, and then half as much as that. Goldman Sachs, Microsoft, Apple, Google, Dell, VRT is about half of those that I just mentioned. And
Hmm.
now VRT, Caterpillar, Amazon, Nimbus, SanDisk, Morgan Stanley, MU, Marvell, BE, Lilly. Those are some of my top. Maybe I named about 20 that I have on.
Do, do,
Those are longer term stock positions for me.
do you cover those ever, or do you just let those ride?
No, I mean I trade in and out of them, but I mean since the last one I mentioned was Lilly, I'll just go to my position detail. The last time I traded Lilly was, let's see, not the greatest example. Last time I traded Lilly was last year, November. Let me go to something that I trade a little bit more. SanDisk is listen. I have a good profit in SanDisk. I bought SanDisk, in the 300 range, up to 2000, and I bought some at 15, 1600. It's 1200. But I've also bought some at 300, 400, and 700. So you'd be surprised, at $1,200 or $2,000, 100, 200, 300 shares is a big notional, number when it's just stock.
Oh no, I
So
know.
it's piecemeal, it's 20, 30
Yeah.
shares, it's 50 shares, it's 17 shares, whatever, however I'm doing in the market itself. I try to take my profits that I'm not using over whatever expenses you have and buy assets.
Okay. Okay. So yeah. So a
But
lot of
I'm at the twilight of my career. I didn't do that in '87. I bought a condo, a car, and cocaine. In '90, I wasn't doing that. It was more like 2000. When I became in my 40s and stuff, and how much, what do you got to acquire? You know what I mean? And that I took maybe longer term investing a little more, a little more serious.
okay. So thanks for sharing all that.
Yeah.
So what's your
And I really didn't do cocaine. I was never a drug addict. I mean, I never really liked drugs. I would buy
that
it
much?
because everybody I was with liked to have it, so it made for a good party. But I never really did it.
Just occasionally on the
Yeah.
weekend,
No,
sometimes
no,
on a
no. Honestly,
Tuesday.
no, never really. But
um,
the opposite sex used to like it. So I mean, if I was there, I would. You gotta.
yeah,
Yeah,
yeah. I
yeah.
mean,
You know
yeah.
how it
It's like in Wolf of Wall Street. Instead of she was Leo and you were the girl bent over. Yeah.
is. Yeah. Kinda.
um, so just so I get it. You're in your twilight. You
Yeah.
keep saying that at least.
Mhm.
So let me selfishly ask you a question.
Sure.
So I'm on the verge of going to full retirement myself and doing my own thing, guys, trading my own
Congratulations.
portfolio and all that. So
Congratulations.
thank you. So we've kind of baby stepped it. I had my wife retire first.
Mhm.
We have
Nice.
our son. Everything's good. We're going great. Life's good. My portfolio, my trading, what I do sustains us more than we need to.
Yeah.
So I'm not in my twilight,
Mhm.
but how would you structure things in your point of view
Mhm.
in order to trade responsibly, maintain, obviously you have up and down markets, days, months, years, all that,
Mhm.
and still safely withdraw. I know you were only retired for 2 hours, but
Yeah, two and a
I
half.
imagine at least for 30 seconds in those 2 hours, you thought about it.
Yeah.
How, I mean, what have you seen out there? Like for me, I've got cash set aside
Mhm.
that is there just, to sustain a year. And
Mhm.
my whole idea has been just, every month replenish. And to your point, the rest stays in there. And I try never to take anything out of my brokerage account as much as I can. That's kind of
Mhm.
my simple take. But I
I
imagine
think
you've
that
seen
I think
different
that's the
things.
right. I think that's the right approach. I mean, you know, guys that made more money than me leveraged.
Mm.
So, and I don't mean leverage with their money in their own positions. They went out and raised money other places, and they may have had
Oh,
their money invested too, but they used other people's money and other businesses' money to make more money for everyone. So, if I would challenge somebody to be better than me because I was average at best, maybe a little bit above average, but if you really want to make it bigger than that, you need to raise capital. And I was never um, educated enough, nor did I want to share my profits with anybody else. I loved what I was making, and I was very happy with the amount of money I was making until I realized that I could be making a lot more if I was a little bit smarter with my
I
money.
gotcha. Yeah. You,
That
you
took
know,
me decades to realize that.
okay. Yeah.
Like when I
And,
when
and
I
that's,
when I would back a trader, I backed one trader on the floor. Other people backed 10 traders on the floor. And the way to do it was to back 10 traders on the floor because only one, two, or three are going
one.
to make it.
What made them different? The ones that made it.
Um, I say they were more educated than me in business, and by educated, I don't mean like going to school or anything else like that. Most of them did. I never went to college, but I think they knew business better than me.
Mm,
I was a child of a broken home. My father was a hoodlum and my mom was a waitress. So, my mom said, Anthony, don't spend more than 25% on your rent and then you'll be able to sustain life. And now here I am, in a day making my rent, and I wanted to keep it pretty close to me. So I kept it pretty close to me. I didn't
yeah.
want to invest it in other people or anything else like that because I didn't know how long it was going to last. Other people who came from maybe more wealth and had families who had businesses or even entrepreneurs or CEOs or anything else like that knew about risk and reward realized that tomorrow same thing's going to happen again. It's not ending. It's going to go on as long as you don't do anything stupid. I thought I would work for a year on the CBOE, make a good amount of money, and go back to Brooklyn. You know, that was my game plan.
Well, yeah. Now
I
you're
never went
there in
back to Brooklyn.
Chicago permanently. Okay. Yeah. No, that makes a lot. I
I
mean,
gotta go. My wife's gonna kill me soon. So please
yeah,
wrap up
yeah,
for me.
yeah. So no, I was just gonna say, it's weird to see, I don't know, to hear kind of your story and the way you feel about that because I resonate with this so much. I mean, I'm kind of the same way. I don't want to play with anyone else's money. I just like my money, but
Don't make
I
them. Don't make my
love
mistake, son.
yeah, I love talking about this stuff. I love teaching it to other people. I talk about it pretty much all day, every day with
Make
people
a
who
sweetheart. Make a sweetheart deal. You want to be in a Yiddish term would be a mensch. You want to be a mensch. Make a sweetheart deal. You take money. They have money. You both have money at risk. You take 15, 20 people's money at risk. You can't take out money unless they take out money. You take out the same percentages that they take out. You only cover your monthly expenses, whatever they may be, your commissions, whatever they may be for the first year. And when you proof of concept to them and you have charged them nothing for your time and money, then you can make yourself a regular deal where you do a 2 and 20, 10 and 10 and whatever, 5, whatever you want to do after that, whatever other sweetheart deal you want to make that's more advantageous for you. They'll all want to invest in you because they saw what you've done the first time.
but you really think you would go back and do that though?
No, me now, no. But if I could talk to Tony at 35 years old, I'd say, yeah, you stupid schmuck. That's exactly what you should do.
Really?
Yeah.
Man,
Yeah.
it's see that to me, people I get DMs all the time. People ask me, I'm like, I'm just not interested in the responsibility of someone else's money. Like
It's
that's
it's
just
it's definitely it ain't easy. I told you I tried doing it one time. I only did it for six
yeah.
months and I gave it back. So I mean, it definitely.
Honestly, what kind of gets me excited is more so helping other people realize that this exists. I
Sure.
mean, a lot of what you
You can
guys
do
have
both.
laid the groundwork,
You can
and
do both. You can do
yeah.
both. You can do both.
Oh man, why you gotta do that? And I'm gonna walk away here with gears turning like, well, Tony said. Damn you.
How old are you?
35.
Yeah, that's the number I came up with. Yeah, no, I would definitely
Yeah,
tell 35-year-old young
yeah,
bat, don't be a schmuck.
yeah. I'm actually, I think Nick and I are the same age, and we're both
Yeah.
Nick. So yeah, funny enough.
Yeah.
Yeah. All right. Well, Tony, thanks for spending the
Yeah.
evening with me.
You're welcome.
Um,
You're welcome. It's always a
appreciate
pleasure.
literally everything you guys do. You, Scott, Tom. I'm happy to
Thank you.
see that the dog's got some fleas over there. So I'm happy you're back
Big,
over there.
big stuff coming Q1, hopefully, of 2027. Stay tuned. You're gonna have some choices to make.
I don't
I'm
think
gonna
we
give
are.
you an offer you can't refuse.
All right, we'll take it.
All
All
right,
right,
good deal.
Tony, I appreciate it. If you could just hang out for a second
Sure.
while I end this.